Hello everyone, this is Rich Passon, CMT, with a business cycle model update for the stock market using the Dow Jones Industrial Average, the Dow. Let's take a look at the medium-term trends first for those of you who are short-termers and may not care of the long-term. Back in 2016, we have what's called a level 1 cycle bottom, and you can see we can just trace these cycles out throughout 2016 into 2017. That's a medium-term or intermediate-term cycle. It's the most important cycle inside of the first long-term cycle called a 3-year cycle, which also relates to the kitchen cycle. Now, what I'm suggesting is the level 1 cycle topped in January, week of January 26. I turned bearish from the 29th through the 31st. I was selling stocks then. And we had this fantastic collapse, so far more downside than what I thought we were going to get. I thought it might stop at 5 to 7% down. And then it was quite obvious that we were having an actual market breakdown. And I returned to being bearish. I feel as though this cycle is bottomed. The week of February 9th was the latest week for bottom. Bottomed that Friday, in my opinion, so also the latest day. And I think this cycle is going to regenerate, recycle, and it's going to be bullish right up into May, June, July. Now, this blue box is not an upside price objective. Pay no attention to that. I'm just trying to give you an idea of when it should peak time-wise. This blue box also, for the January high, was not showing an upside price objective. I had given up on price projections. I felt it was futile in the sense that price projections that would normally take 2 months to come to fruition occurred in a matter of days, it seemed like. I am now returning to price projections. I do think if the price takes out the Wednesday high of that collapse of week of February 9th, that it's bullish. And some indexes did that this week. They took it out, and some have not. But that would give us upside objectives to return to the record high or a little higher. And if it takes out the record high, I think I'm going to have objectives for 29,300 to 30,300 in the Dow. But that doesn't really sound short term. We may wait quite a while for that. I don't know. But I just want to give you the general idea for this particular intermediate trend up into May, June, July. And then it's going to pull back in a bottom June, July, August. Now let's talk about this quick collapse, because I think there's a possibility it was a long-term 3-year cycle top. That was a second opportunity for it, and it has to coincide with one of these level 1s. I think this is the first opportunity for a 3-year cycle bottom, and I'm thinking it may have occurred. Now, how can you have a long-term cycle turn bearish and then only last less than a month, or span over 2 months and it only took 2 weeks? And some people say this was a record collapse, a record pace drop. Well, I learned all the way back to 1920s that these 3-year cycles, there have been some that have fallen in just 1 to 2 months. Get it over with. I've always thought it was 5 to 7 months minimum. So we've seen these flash drops before we even got into the computer age and all this extreme leverage and fast trading that goes on. Fascinating piece of history. Now, the point is, if the 3-year cycle top is in place and the 3-year cycle bottom's in place, we should be long-term bullish into late 2019 to early 2020, or even mid-2020, for the next 3-year cycle top, which would be the latest time for a 9-year cycle top. And a 9-year cycle top is always related to a recession, and I believe 20 to 30 to maybe even 50% down in the stock market. So I think I'm going with a forecast of shoving all that bearish stuff out to the latest allowed. And I'm just not seeing the fundamental information, the macro, the global, the domestic information. Not convinced I'm seeing the technical information to turn long-term bearish here. I think this was just like a flash crash kind of thing. We got it out of our system, and it's time to return to the bull market. But there is a possibility that the 3 and 9-year cycles will top in May to July, and it's going to get very bearish. There's a possibility the 9-year won't top then, but the 3-year will, and then later on it's still going to be bullish anyways. So there's multitude of scenarios here, but the bias tends to favor being long-term bullish still. Now, after this collapse, even if it's still long-term bull market, we're going to see little short-term blips down. The market is up about every other week and down in between, And it doesn't always stay that way. Sometimes it skips a week, but that's a good general idea. So I won't be surprised this week to see a pullback in the stock market, and I wouldn't be surprised to see some choppiness for a whole month maybe. But I think ultimately it's heading higher into May, July. It's just questionable. Can it make a new record high? Is it still a long-term bull market? I'm going to favor the bulls for now, have my close stops, see what occurs here. I am watching out politically for trade war issues this summer with China, NAFTA. That could start to hurt our economy. So there's some headwinds out there. There's some things that could kill this bull market. But ultimately, to me today, everything adds up to still be a long-term bull and be optimistic on the U.S. economy. I'm Rich Paulson. Thank you.